All right, guys. Hello and welcome to Boom and Crash Expert Advisor. I'm Danny Legend, and welcome to this edition of The Dollar is Awake, where we are talking about live market analysis with our guest, who is almost not a guest because he's been on this edition several times. And today we are taking a look at the bulls and then the bears market, and then he's going to lead us through how the market works. And he, as I said early on, is an expert. He's been trading for about 8 years plus, and he's going better and better as the days go by. I've known him for a while now, and I've seen some of his prowess when it comes to trading the market. Very, very accurate, and he has a lot in his goodie bag. Also, he's the founder and the runner of the YouTube channel Boom Crash Strategy. You can check it out. I'm sure in the course of the live stream he's going to drop the link in the description for you to follow up. And trust me, you'll learn a lot today. And if possible, you can even record this if you have a recording software, because you're really going to be blown. Your mind is going to be blown away by what he's going to teach us tonight. So once again, you're welcome to Boom and Crash Expert Advisor, and I'll call on ATM to take on. Right, so ATM, the floor is yours.
All right, can you hear me?
Yeah.
All right. So we're here today.
I believe everyone can hear.
Can we get a yes in the chat box here?
Yeah. If you can hear, please drop. Yeah, please drop a yes. I see Adnan. Sportsmania says yes. Kevin says hi. All right, so we can proceed.
Okay, cool. All right, guys. So yeah, my channel is Boom Crash Strategy, and if you want to go ahead and check that out, I'm gonna pull that up here for you in a minute and drop the link. So I haven't been too active on my channel because I pretty much spend my time teaching and training my group. I spend close to 4 hours a day on Zoom calls. And I'm about to reveal some of the information that they get from me on the daily. And I would encourage you guys to check out our Telegram so you can get more info on that. And check out the Boom Crash EA Telegram so that you can get the bots that he provides so that you guys can start making income as well. So it's all right here for you guys. So tune in. So what I got up here right now for you guys is the bull and bears market, right? And I call this the money printer because there's no excuse for you to not make money on this index. So since there's two of them, I mean, I'm not going to say how much harder can it get, how much easier can it get, right? Because the whole idea here is for you to be able to confidently print money without worrying about things like the stuff we worry about on STEP and VIX, you know, higher time frame analysis, this and that. So if you understand that the bull market is an up market, seems pretty clear, and you understand that the bear market is a down market, which is pretty clear, let me ask you a question. You could just think on this. If you look at the daily candle on both indexes, what do you notice? That they pretty much follow the sentiment of what the market is. It's called the bull market, it goes up. It's called the bear market, it goes down. So just understanding this simple bias, if you understand that each of these is a daily candle, wouldn't it make sense for you to come onto here, take a daily trade going up, and let that thing just ride for 12 hours, 14 hours, 16 hours, however long you really want? And the worst case scenario, yes, we do have down days. Broker, and thanks to knowledge, we have the ability to do what's called short the market as well, which is where we can profit on the down positions also, and you actually make more doing so. Now, that's a whole nother story, so I'm not going to cover counter trend trading. What I am going to explain to you guys today is something simple so that you can walk away from this live stream with at least some sense of being able to trade the market confidently. So once again, if you could take a trade every single day going long on the bull market, what do you think your success rate could be? Plus, you have a stop loss. So really, you have calculated losses anyway. Now, vice versa over here, right? On our bear market, we're just looking at the reverse setup. So in essence, all it is you taking a short position every day and not worrying about the updates. So more importantly, if you line it up day to day, you can play the bulls up, the bears down. And if you don't have a setup, let's say the bears are going down, like today right now, go play the bear market. So the bear market is just barely starting to tip. It's not really much. But see, what we have right now though, guys, is the new daily candle, which is why this live stream was timed perfectly. Perfect example for you guys to be able to understand this. So here's what I'm going to do. I'm going to enlarge the bull market chart because human psychology, naturally green is, the good color. So I'm going to go with this example for you guys today instead of getting into shorting the market, all that stuff. So what I want to show you, actually, let me go to the 1 hour. Because we all have 24 hours in a day. What do you guys notice about every single day? Right?
It's always moving
up. It takes off to the upside, So the hardest thing you have to do is remember to come at the open, which is right now. This is where you take your trade. That's where you get out. The contract resets every single day to $1,000. Look at the price index over here on the x-axis or y-axis. I'm sorry. You can see price every single day. We restart this asset at $1,000. So your goal is just to track how much above 1,000 we're going to go. Now, if you can understand that much, you can see how the momentum in the days started to play out where it started to weaken and weaken. And then you might even see we have our little bit of a negative day until it kicks to the upside, right? So here's what we got. I'm looking at how the days open and how the days close. I'm also getting supply and demand zones in these areas because that's going to basically allow me to find out where in the future price is looking to go. Now, what you do is you can take a Fibonacci tool and go ahead and start out with the day's open, high, low. 3618. Boom. Do it again. Daily's open, high, low, swing. Boom. Let's do it again. Daily open, high, low, swing it. Boom. Don't make me do another one. Daily, high, low, swing it. Boom. It's 3618. I don't know how many times, right? So it's too easy. So get on board, get on this money train because this thing's printing money every single day. Our goal is to capture it. So if we all know, once again, this asset starts every single day at the $1,000 mark. We can mark this out on our chart as a zone. Or you can put it as your horizontal line. Get into your tools, get into the coordinates, make it all perfect, and make it so that we can see it. Boom, done. Lock it in place so we don't move it, done. Now, once we have this bias, what do we want to do since we did everything to the upside? Vice versa, we want to do the counter trend to the downside, but it's not that we need Fibonacci's because we're not trying to track how low it can go. What I'm doing though is I'm going back into the past to see previous price data, right? Because what you guys got to understand is it's here. This is all knowledge and it's here. So if you don't use it, somebody else is. So I find previous demand zones, which we can use just in case the market has those days where it moves down here on the bull market. So what I'm just doing real quick is basically just tracking in some areas of interest so that I know in the future, if we ever push down to these levels, this is basically, I would say, in my opinion, the furthest it will go, especially since the sentiment for this market is to move up. So right now, what we're looking at basically is the first hour right here. The first hour of the day, you can see the contract reset from yesterday. So we don't trade the open because we need price action to create the open, low, high, and close for the day. So with the first hour candle being built, we already know and understand that our daily prediction is what? Everything is supposed to go up, right? So another thing we can do, especially throughout the weeks, as you guys trade this more frequently, on the down days, you can get your Fibonacci tool and use this as a TP for you guys to be able to see levels in the future that the bull market should actually hit. That's going off the open down to the body of the candle. Then I go down to the wick of the candle. Look at this. Boom. Precision. My tech, I don't miss. So if you want to know how to do this kind of stuff, I'm trying to make this as simple as I can here on this live stream, but it's probably going to take like a one-on-one consultation to really get this knowledge ingrained. But I don't want to leave you guys hanging. I really want to give you guys like enough value to be able to trade confidently on your own. So here's how we do that. You guys see how these candles, because we're playing what? A game of 50-50 up, down, right? These candles are too choppy. You know, I really don't like to trade the regular candles, but I do because they are the most accurate. However, if you want a more clear direction bias of the market, you flip it over to what's called the Heikin-Ashi candles. And then obviously every day when you see the massive drop, that is obviously the daily candle reset. Daily candle reset. So obviously those cannot be traded. Otherwise, I would milk the market every day at 23:59 p.m. and just drop short trades. So trust me, I already tried it, but it doesn't work, guys. It does not work. But they figured that out. So here's what we got to do, okay? We already know where our midline is. 1,000. Lock it in. Done. That's our open. We know that every single day. This is our high because it was the only green candle that pushed up. That's actually our high unless you consider the open our high. Based on structure, that's our high. That's our low, got broken. Now this is our low. So this right here is our little trading range. Okay. So we're squeezing to the downside. That's okay. What we start doing is what? We start tracking our fib. Now we can start seeing, what levels are we targeting, right? Looks like yesterday's close, right? So as the price action pulls down, so does this Fibonacci, which you guys should have in place. And then that allows us to find where the day is going to project, right? So we want to be able to manipulate the chart here a little bit, skew our candles. We want to start tracking our downtrend here. Now, you can either do one of two things. You could track your trend lines like this off of the top of wicks, or you can cut through wicks. It's a little bit more aggressive, but what I'm doing is I'm bouncing it from this top, off this candle, off this wick. So technically, it's still a valid trend line. It's when these trend lines get broken, which I'm actually going to change color, that we then look for buying opportunities, all right? So that's when we begin to look for the market to change direction, and then that's when we can take our buy trades. So we're pretty much waiting and dragging our fib as this continues to create lows. Now, one of the things you guys are going to ask, and like I said, I don't want to make the indicator setup I'm about to show you too complicated, but since this is TradingView, it only has default indicators. So I'm going to help you guys out with something that should give you some clarity. One is the awesome oscillator. because it is. I turned it into columns and I added on the price line. What you're doing is you're going to see how this is the open. You're waiting for price action to return back to the 0 line. And then once it does, you then can pull up something like a MACD. And we're going to be looking for a divergence pattern. Now, once again, I said I don't want to make this too overly cluttered, but I do want you guys to be able to see a few different strategies all at once. So then that way you can understand how we're finding our trade entry. So these two oscillators are kind of similar. I just like the fact that the AO is going to flip colors and the MACD is going to have not only two oscillators running at the same time, but I can track these kind of patterns right here where divergences are going to happen. So if this histogram can push a little bit lower, I would track for the black histogram to also make some kind of divergence right around here. Now, I need for this histogram to be above the 0 line and this signal line to be above the 0 line to give me clear direction to the upside, right? So if you can see here, that's the pattern we're waiting on. Now, I mentioned before, once again, real quick, that the regular candles are more efficient and more accurate than the Heikin-Ashi candles. However, the Heikin-Ashis give us this clear direction, right? Here's what I do. I hit the compare button up here. I uncheck the overlay on chart, okay? Uncheck. I'm gonna add on this exact index onto itself. And what it's gonna do is give me a window to replicate that chart, okay? So the reason why I do that is to give myself clear direction for one, that I can have all my drawing tools and this and that on one chart. And then on the other chart simultaneously, I can add on all kinds of things, Bollinger Bands, everything I want. So I'm gonna go ahead and do that now just to show you guys why this is gonna be so important. So I'm gonna take Bollinger Bands, merge it up, make sure that it's scaled to the right, uncheck the left axis, it's done, okay? This is what we got. So they opened and we're basically pressing the lower band. So what I want to be able to do and look for though is how price action is going to stop moving down, which is where we then create some level of divergence here on the MACD and the AO. That becomes our entry with the trend line break. We take that to the upside. So if you have your D trader up, you can spot that binary trade for like 12 hours, 14 hours, 16 hours into the future. So here we are, guys, right in real-time action. Let me get rid of this box, all right? Clear it up, clear it up. Remember, this is what we're doing. We're still dragging our fib, tracking how far it can go to the upside, finding our TP levels. Okay. So we're waiting patiently, once again, for this to create a strong enough pattern for this to stop. The AO is pretty much going to give it away. So we're waiting for this. Okay, so this is all negative territory. So right now, what I want to be able to do though is understand how strong the direction is. Now this is where the sauce is going to start coming in, the whole key of how everything breaks down, all right? So what it is you using the direction movement index. I'm actually going to add it on twice. I have a specific reason for this, and you're about to find out why. The bottom one, I'm going to make the ADX black. I'm going to make the line dark so we can see it. I'm going to make the D minus red, and I'm going to make the price line available so that we can see that. So this is your indicator, all right? The way that this indicator works is whichever line, either blue or red, okay? Whichever line has the relationship with the black line, which is the ADX, the average direction index, that is where the trend goes. So what I can already notice is when the market is pushing like this, very strong with the black line, and the black line takes off, That's a strong trend. This right here would be a downtrend. This right here would be an uptrend. You see, blue line over red line, it has the relationship with the black line. It's closer to it. Whatever line is closer to the black line is winning, right? And then it ends here. You can notice all the chop. The chop happens because you can do trend line analysis here, straight up on your ADX. When you get the trend line breaks, let me find a color that works. When you get the trend line break here, that's also where the trend takes off to the upside. That's how you know to take our trade and to hold it the entire time. It's a little bit of a more advanced strategy, but as you guys pick up this kind of wisdom, you'll start to notice how, when, and where trend lines can be used. Because most people would think you only draw trend lines on price action. No, you draw it on your indicators. Because this right here is another great trade. Blue line and red line cross. The black line is setting up on a trend line break. You guys see that right here. Everything happened right here. You're waiting for that trend line break. You're waiting to see the blue line cross over the red and the blue line over the black line, guaranteed. And you never hear this in trading, all right? This is where I'm telling you a secret is. Blue line over the black line is guaranteed to continue moving to the upside because the volatility squeeze of how this is going to move, you now have a 3-level Elliott wave setup to the upside. That's where price gets weak. Not only that, you have the squeeze play going there. So let's go here. Let's check this out. I'm going to draw real quick a vertical line from here to here. Let's go check this chart out. Boom. Easy. So it's how you understand price action and how you understand your indicators is why you win. Now, I added 2 of these on here. Why add 2? What's the whole point of adding 2, right? So the reason why is because I don't use it the same way as you would expect. I turn this all the way down and I make these columns. And guess what? I just created my own volume indicator.
I think my people want you to turn to the basics a little bit. Salatolo says this is advanced.
I'm going to outer space.
You're
all
flying.
Right, let me go. I go really fast, guys, so it's my apologies if it's a little tough to keep up because, like I say, I have pretty advanced classes and stuff. So, okay, so we're looking here, guys, right? And we're looking to be able to take this entry. So here's what we're doing right here. We're seeing how the volume indicator that we built, which is a direction movement index, set to a period of 2. I changed the D- to red. I changed this back to green. This is actually our entry. Yeah, this is pretty strong. This is pretty strong. This might be an entry right here. You guys see? One second. You guys see how this is starting to take off here. So this is the start of what could potentially be for us either our first entry or what's going to be the start of a double bottom pattern, which is where we add on a little cipher and we're just looking for price action to retrace back down off of this trend line up here, create a little area of support, and then that's where we can trade a little bit more confidently. So like I said, I wasn't trying to get super advanced, but it's kind of by habit. So I kind of just do this off whim. But this is the trade setup that we're currently in right now. We're looking for how we opened, price try to create a high twice here, failed. It moved to the downside, which is why we're tracking our Fibonacci from the open to the low. That then creates our price targets with our Fibonacci tool. We drag these out into the future so that when price action hits it, we already had these calculated for a reason. And once again, I'm letting you guys know, if this is not already our entry to go long, because I was calling it that on this direction movement index, I saw this thing break out, take off to the upside. Not only that, this actually beat the high of its most recent swing there. So I'm noticing a lot of things at once, but what the main point of all this is that as you get more familiar with how to read indicators, how to read price action, you get a little bit more tech savvy, you get faster, you're going to be able to track all this stuff in real time and then be able to analyze what's going on. So here's what I'm doing. I'm seeing how this being open, price action has now created our crossover. However, our black line, which is our ADX, which is our volatility, is now pressing down instead of up. This is our fade. This is our recovery move. This is the slow recovery move. So I'm not overly eager to try to get into my long position right now because I'm still waiting for the ADX to recharge, aka come back down to this level, play around with either of these two lines. And then what's going to happen after we get maybe like a little bit of our ABC pattern here, now we can start waiting for the next Elliott wave to set up, and then boom, we're going to take the trend line break, we're going to take the squeeze break. So I know that I'm probably not making this the most beginner friendly, but I think that by you guys seeing what experience and knowledge looks like in real time, that you guys can start to see how knowledge is your edge and how it plays in your favor to be able to understand how price action moves. I haven't touched these drawings. That trend line was respected. That trend line is for the divergence. Yeah. This cipher pattern is drawn out so that just in case I said that this wasn't our breakout, because this is still coming back to the zero line on the awesome oscillator. The MACD is still, you see the black histogram? It has to pull up all of this negative down move. So I'm going to actually make this red instead of blue. Okay? It has to pull all of this up in order for this black histogram to be overly bullish, right? So that's how you're waiting for an entry. Okay? So I know that this is a lot of analysis all in real time, but what it is that you're doing as the key is you don't have to look at all this until you're ready. The most thing that you need, literally, is trading off this blank chart right here until you can adapt to learning all those indicators, right? Trade simple. 4-hour time frame is your macro. 30-minute time frame is your core time frame. And we're going to flip to that here in just a second. Okay. So 30-minute time frame is going to be your core time frame. You go down from the macro. And the 5-minute is going to be your micro time frame. Okay? So why do we have 3 time frames? The reason is because each of them plays a different role. All right? So what we know is that the day just opened. So we're right now this range. That's all we're doing. What we can do is look at previous price action, pull targets out of thin air off of that. These are just zones of interest. You can pretty much plot these just by finding points. If that's too difficult, put it on the line chart, or just keep it on whatever you're comfortable with, but it's pretty much just finding swing highs and swing lows. So find the extremes, right? Now, here's what we're doing now. We also have a trend line from yesterday's high to yesterday's close, okay? That's also in effect. So we're also waiting for that to trigger, along with what we already did on our Heikin-Ashi chart. We have, instead of a trend line this time, we're going to use parallel channels, draw it off the wicks, come into the settings, add the midline, turn that yellow, done, right? So now we have a little daily trading range, right? Now, what I personally like to do is track what are called 3-level setups. And Danny Legend actually taught this on his channel, guys. These are basically Elliott waves. So it's when price action creates 3 distinct lows, which are the 1, 2, 3, 4, 5 pattern. That's what I'm particularly looking for. And then when I get a divergence pattern, that's when I'm safe to take my long entry. So we're setting up a trade. You don't trade because you particularly feel like it, or because you're, oh, I'm going to jump on a chart. Oh, okay, just go up now. You have to find the conditions and reasons for why you're executing. So for us right now, this isn't like some day that just took off to the upside, right? From the open. So we're playing it by ear. We're playing it by each day. So it didn't do what we expected at the open. It did what we see. You trade what you see, not what you want. Price is going to continue to go down until we get a distinct 3-level setup. Go back to our direction movement index. This is like volume now for you. Go back to our ADX. Let's get rid of this so I don't confuse you. All right. We're still trying to fill this area right here. Red line has the relationship with the black line. Price action still negative. Blue line still very negative. AO turned red. Or no, I'm sorry, this is a 5-minute chart. So it's been red since the open here. Okay. So we have every reason right now to not take our trade yet. And we broke yesterday's AO, which is why we're in such a strong downtrend. So really the only thing you could have done off this play was waited, unless you just have the guts, honestly, to short the bull market, which, you know, hey, these opportunities happen. So not saying you can't make money on this. You absolutely can. So we're still waiting for our play here to set up. But for the most part, guys, let me get you off all this clutter, right? And let's get you on a clean mindset again. Let's start fresh, okay? Let's go over to the bull market. I'm sorry, the bear market. We were just on the bull market. Bear market works in a similar way. And we're going to do the exact same things that we did over there, over here. And all we're doing is looking for the opposite. What did I do over there? I did things like Fibonacci retracements. Look at this. Perfect targets. You can literally do this off of every green candle and find out what the future days are going to be to the downside. High accuracy. So with this big green candle, we're targeting that 1618 is an area of interest. So this is all we're doing, right? We're just setting up our week. Now, we're doing the same thing that we did on the bull market here, only now we're looking for all the down opportunities. And vice versa. We have the bull market trending down from the open, and we have the bear market trending up from its open. That's okay though, because remember, it still needs to create a 4-hour, aka 4 bars, 4 hours, 4 candles, to create an established 4-hour candle. Macro, micro, and macro core and your micro. Remember, you drop down time frames. Okay. So what we're doing, right, is we're basically tracking the same thing we did before. We get in our 1000 line. Lock it in. And we're waiting for a divergence pattern to happen to the upside, which is going to be basically, guys, some kind of double top pattern. Okay. That's going to be our trigger to be able to start taking our trade down, right? So I'm not trying to make it overly confusing again, but let's just break it down, jump in. This is the bear market, guys. So remember, sentiment is always to the downside. We're waiting for, like, look at yesterday. Look at the day before. So price action can do a couple of things. So we're waiting for our day to settle down a little bit. And then once we start getting that strong bearish momentum, clear as day to the downside. That would have been our play. Trace back up. Could have even taken a second entry. And the day even played out to its original channel line. So we're just waiting for our day to set up. And we can already see where our triggered areas of interest are. Right? So now all we're doing is waiting for previous areas that we've seen before to look for those also as entry points. So we're just setting up zones. That's all we're doing. We don't even have bias yet, unless this thing just took off to the downside. So there is no trade until there's a setup. 4 hour down into our 30-minute. The reason why the 30-minute is the core time frame is because we can either flip up to the 1 hour or flip down into the 15-minute. Either way, you're going to either, 2x your chart. You're either going to cut it in half with the 15 or you're going to 2x it with the 1 hour. So here's what I'm doing on the bear market. Same thing we did on bulls. Put this over to Heikinashi's. Okay. Compare the chart. Now we get clear direction. We can see what we saw previously, right? And now you can trade off both charts, right? So what we're doing on the Heikinashi's is we're waiting for clear direction. We're waiting for clear direction, right? And on the regular candles, though, we're going to see that price action flip on that reversal a little bit faster than Heikinashi's. So if you have a high risk tolerance, you can get in a little earlier than when the Heikinashi's give you the clear direction. So on a previous day's action, here's what I see. This right here is an Elliott wave setup, level 1, level 2, level 3. Okay. And Danny Legend already taught this on his channel, guys. So if you haven't watched that video, I encourage you to go watch his price action analysis on how Elliott waves are done. Now, that would be a little bit invalidated, so I'd have to technically take that, plus that, draw that down to the wick, make that a fair Elliott wave, because the 1 cannot be lower than the 4, or the 4 can't be lower than the 1. So that's where I get my structure. That's where I get my setup. With that bias, boom, take that trade. Now, you're not going to be in it until technically this bearish engulfing candle, which is your structure candle. Okay, we're still on yesterday's price action. Okay, that is your go candle. When you get a bearish engulfing candle on the bull, the bear market, that is your trade. So what you do is you have your stop loss above this most recent price structure. And this is your entry candle, this one right here. What would you have done from the recent price action? Swing high, swing low, boom. What does that give you? Boom. Take that second play. Perfect. Fibonacci's do not miss. You just have to know where to draw them. So set up our day. Look what we're targeting. Find all the zones from previous day. Find out how they align into today. Those become our targets, okay? That's money. Those lines get hit, that's money. Okay? So this is just how we're analyzing our chart so that way, once price starts moving in our favor, we're just tracking our trade. You have to become the human indicator and then just let your trade plan play out. So we have no trade until we have clear direction. Right now, there's a pump on the bear market. We're not trading it unless you want to take the risky up trades. You could binary trade that on your D trader for a few minutes. Sure, let's go to a 1 minute chart and see. Yeah, you can catch a couple scalps. But see, that's the difference between scalping and swing trading. So we have no trade yet. We're only tracking the high, the Fibonacci. From its low. Okay. And then once again, that's why I had all the other indicators up on the other chart. The MACD is going to give us our clear direction. So then that way, what ends up happening there in the future is that we get clear direction. Put this to columns. All right. So we're looking for the divergence on the MACD. I want to see this histogram potentially pop back up against the 0 line. And then I'll draw from there to where it pops up on over. So if that happens, it doesn't have to. More importantly, I'm looking for this histogram to continue to stay down. And when this goes beneath the 0 line, that's when this black histogram will play to the downside. Oops, give me a second. It'll play to the downside there. And that's when we start to track our targets to the downside. And you watch for the black histogram and the green one to hit these purple lines. Might be a good time to start getting ready. If you guys aren't already in a trade, this might be a good time. Conditions look like they're getting met. Level 1, level 2, level 3 setup. We already tracked this out on the other chart. Trend line here looks like it's already gotten broken. This looks like the retest play. So if we're done hitting highs for the day, that's our area of supply. Now we're going to go test area of demand. Once these get broken, we're free and clear to the downside. This is when and where, guys, we have our direction movement index, right? Our awesome oscillator, right? Let's go look at this real quick. Flip this over to columns so we can see it. Boom. You already see price action doing its downside move. You already see the AO moving back to the downside. Once it's underneath the 0 line, free and clear to the downside. Direction movement index, quickly, because we're already getting our play. We're already getting our play. Change this to 10. Change this to black. Make it thick. Turn this red. Make it so we can see it. Add the price lines on. Done. Hurry up. What do we got? This is our trigger. We already have what we were looking for back here. A, B, C. We're looking for, yep, trend line break off of that. So here's how it works out. We already have our crossover. We already have a little bit of a recharge set up on the ADX, the black line. Now that the blue and red line have crossed, that's our trigger for as to why right now, bear market's already dropping. Once this right here breaks its trend line, this ADX, we're free and clear to the upside. We're going to see how this thing comes into its old areas, make those black, right? We're targeting that for volatility. And we're making sure that this blue line presses down to 0. This red line presses up with the black line. That's how we know we have clear direction. So once again, we're looking for the MACD to continue down, stay below 0. We're looking for the AO to stay below 0. And that's part of why you could have had a little bit of a quick trade here for a scalp. If you're in for 15-minute, 10-minute trade, that could be your binary trade right now. So if you guys want to take that, unless you're already in, this is the channel that we're building. We're in after this engulfing candle. Put our stop loss above this engulfing candle. And that's the recent high of the day. That's your stop loss right there. And once again, guys, boom, this is pouring off to the downside. And that's how I trade. So real quick before I turn it back over to Danny, or for you guys, if you have questions, I'm going back to our bull market so that we can see what happened over here. So the cipher double bottom didn't play out. We didn't get divergence. We're still tracking this downside Fibonacci, redrawing our trend lines, which we could have used the channel instead. So the only play for the bull market right now is, had you played the open, you maybe played a hedge play, you'd definitely be in profit right now on your short trade. Your up trade, your long, would be in max pain right now, would definitely be negative. So what I would recommend is you potentially cut off the profit from your trade where you went short from the open. That would probably end up being pretty profitable here. Exit, wait for this price action to start creating a pattern where this moves back to the upside. And then you'd feel safe once price action is above the 0 line here. Then you could take your long. Okay. So once again, we're looking at how this is creating a strong downtrend. We're not in the trade yet. We're waiting for 3-level setup, Elliott wave here. Put our stop loss at the lowest low. So now we're waiting for some kind of divergence as confirmation. Now, this being a 5-minute chart, I like to use the 5-minute because it will give us more structure than the 1-minute. So as we let the 1-minute chart build the 5-minute blocks, it then gives us confidence while we're trading to know when to get in, when to get out. So we're here, looks like level 1 up here, level 2 in this mid area, and it did try to stop on here for level 3. So if you guys feel confident enough to take your trade, you can get in, but you want to wait for the trend line break to really be assured that we're going to have enough momentum to carry us through, right? Because we still need to technically get back up to $1,000 here. We're negative here on the bull market. So let's go back over here to bears. From its open, pushed up a little, pushed back down, pushed up, broke its high, created its level 3 structure, broke that trend line, now created a downside channel. We're in this trade to the downside. We have our stop loss above the most recent price structure. Price is pouring off in our channel. So we're in a profitable trade here on bear. Bull, we're waiting for this to get triggered. I'll show you this Elliott wave right here. Open. That's the pattern I'm looking for right there. And then we're just waiting for this cipher to play out to the upside. So this is our entry right here in real time on the call, that if you guys are looking for your bull market play and your bear market play, This would be it. So I don't know how the rest of the day is going to play out. I take quick scalps. So if you guys are in and out on your trades, I would encourage you to jump in for a few minutes, make your profit. If you're looking for the long-term swing plays, you're going to have to monitor your trade throughout the day to be able to find out when and where price action is going to kind of react and make your trade go the opposite way. So you got to know when to take out your profits. Supply and demand. This over here, level 3 to the downside. And it started to kick back up. It's also why you should look to exit. Once again, quick scalps. Give me 1 second. So I'm just going to get rid of this short position. Okay. What do we see here? What do we see here? What do we see here? This is our guaranteed breakout play. Take a long on bull market. There is blue line over black line. This means that the D plus is way above its ADX. There's going to be a breakout to the upside. We've already gotten the D plus and D minus crossover here. So that gives us a strong confirmation that we can start to take our bull market trade. Said I'm already in this. Look at it taking off. It's going to fill my cipher pattern. We're going to go target these Fibonacci levels. Let me lock this in 1 second. Get this out the way. Okay. So if you guys are in this already, this is called in real time. I told you the conditions as to why. We pretty much tracked this entire pattern. All of this selling volume that you see on the MACD has now recovered. And look, black histogram to the upside. This is starting to push to the upside with that green. Okay. Price is pushing up now. Signal line here, pushing up now. Direction, pushing up. This thing's going to take off because what do you have here? Trendline break, straight down. Now you're just watching how these two lines move the price. Because the thing is indicators lag price. So your job is why I've also tweaked this to a 2. You can put it on a 1. It's just going to filter it out a little bit more, and it's going to give you these like indecisive areas too. So if you put it on a 1, you're going to get that kind of setting. I put it on a 2 just to filter out 2 bars. It's basically a Heikin-Ashi filter. So what I'm doing is I use this indicator specifically as a volume indicator, and I can see the difference in buy and sell volume, which the difference here is what we call the delta. But see, I don't want to get into like overly confusing stuff, guys, but like everything I'm telling you is stuff you can pause the video and write down the word that I said and then go look for yourself as to how and why this stuff played out in the future. So like look up Elliott waves, look up divergence, look up this kind of stuff if you're not familiar with it. So it's going to help you in the future to be able to know as many indicators as possible. So it's not so much about making your chart all cluttered up and complicated to look at. It's about how you are able to analyze the market and then use different indicators as a tool to be able to give you more confirmation. So for me, I could draw price action all day long and be cool with that. But it's having my other indicators on my chart that gave me that confirmation to say, don't buy here, wait for a divergence. Don't buy here, wait for a divergence. Price action created a lower low from here to here. I then saw on the oscillators, boom, we got divergence. Then we took this play to the upside. You saw the DMI go positive right here. That's why we took that trade. So I know this is a lot all at once, but if you guys can keep up, I mean, we're moving at the speed of price. So everything I've done for you guys on the call is basically everything that, you know, you're going to have to start to learn to do in real time. So then that way you're just as fast as the chart. Because when it really comes down to it, this moves a minute at a time. So I want to wrap up here, guys. If you have any questions here in the comments, I hope you guys were able to hear me clearly and understand what I was being able to explain to you guys. And then if you were curious about the indicator setup, pause the video, rewatch it, get the settings, or send it in the chat here if you have any questions, guys. So Danny Legend,
Yeah.
I'm gonna drop it back over to you.
Okay, thank you, ATM. Yeah, I trust you've all been blessed with some new knowledge analyzing the bulls and bears market. So guys, if you have any questions or any observations, any doubts whatsoever, just drop them in the comments. I've not seen any questions so far. Also, I think some of you were asking where we can find the market. It's on deriv.com dtrader. When you open your platform, you see dtrader, go there and then look for bulls and bears market. Right, so I'll just give a space of about 3 to 5 minutes. If there's no question, then we wrap up.
All right.
So in the meantime, I think you should drop your YouTube channel, his YouTube channel link.
Oh, yes.
Or the name is Boom Crash Strategy. And then you can also drop your Telegram link, your personal Telegram link. He offers one-on-one consultations via Zoom calls. Right. So we'll still be waiting on some questions. Also, this video will be available on the channel right after the stream. So if you missed anything, you can always go back and watch.
So I know that this probably over here is a little bit more overly complicated than most people want to get into, but I played out a price pattern, and out of the middle of the core of this pattern I have is exactly where price is right now. So I just want to say that there's more advanced stuff and deeper science stuff.
Yeah.
And I reversed this price action, and that played out pretty favorably. So there's definitely like more knowledge you guys can tap into. And once again, this play is going exactly according to my analysis. It's the ABC wave of the Elliott. You guys are seeing it real time. You got a real-time entry with real-time analysis on a legendary call. You got me and Danny Legend teaching you guys right here. It doesn't get better than this in the perspective that I told you every reason why I was getting into this trade. I explained it in real time to help you understand why we didn't get in here, why we didn't get in here, why we waited for this, why we waited for the trend line break. We're in the ABC wave from the Elliott. We found divergence. We found a breakout. We found a crossover. We have the MACD and the AO both above their zero lines. That's why I take my trade, because I'm putting knowledge, which is my edge, that 1% edge, in my favor, so that off this indicator, off the MACD, I got three things telling me info, plus 3% to my win rate. I got the AO telling me stuff, that's a plus 4%. I got up here, ADX telling me three different things, 7%. I got this telling me two different things, plus 9%. I got the Heikinashis versus regular candles. This chart alone, I already have a 10% edge over my 50-50 gamble compared to a beginner who doesn't have any of this. Now, it's not to say you have to have this. It's to say that when you can study price action enough and you can study what indicators work for you, you'll be able to understand what the candles are doing in real time also, because it's not so much that the indicators are the end all be all. It's that when you read out, okay, we're underneath the 1,000 on bull or bear market, right? Now you're looking to see how much further we can go, is reacting off this trend line here. So if this plays through the downside again, right? That's fine. We can also have, what are our zones from yesterday? We go to previous price action, always. Go to the past, find out where we can go. See all these wicks down here. And if we go to a 4 hour, we haven't even gotten a green candle on a higher time frame. This is a 1 hour. We haven't even gotten a green candle to give us clear direction. So when it comes down to you guys having to take your trade, if you're taking scalps, you can do what I did on a 1 minute. If you're looking to swing trade this, your job is to wait for higher time frame to show you clear direction, and then you'll be able to take your trade with confidence. So that's a trend line up there. You want to wait for that to get broken. Let's go to our core time frame, and then I'm gonna wrap up and end it for you guys so it's not too overwhelming. We still see red candles on the Heikin-Ashi. Break it down to 15-minute. Still got red candle on the 15-minute. Break it down to the 10-minute. So it's not about like which time frame do you use. It's about, I use all my time frames. It's about how frequently I'm flipping through them. So the 10-minute shows us something real quick, different from our higher time frames. It's the only time frame right now where we have a change in trend. This is the indecision that we're looking at right now. However, this has no clear direction, no confidence behind it, no momentum to make us think, oh, it's just free and clear to the upside. No, we're waiting for that to get printed. We're waiting for those candles, okay? That's what we're trading in the future. If you want early entry, that's why we're already in. If you want confident entry, that's why we're waiting for higher time frames to close as green candles. So here's what I want to do for you guys real quick, and I'm going to finally end this call on another strategy you guys can take away, because like I say, I like to drop a lot of value. So real quick, bull market again, pull it up, daily chart, put it on regular candles. Here's what you guys can see. Down day. That's all we need to know. That's all we need to know. Down day. Don't even trade a bull market if you guys just jumped on, right? So if you're not looking for a trade here, that's why you go to a different market, like the bear market, and then that way you can find a different trade opportunity. So one thing for you guys, if the chart that I had looked overly complicated, okay, that's fine. I want to drop a very, very, very simple strategy for you here real quick, okay? Add fractals onto your chart. Do the reverse, play as above, so below. So change everything here. Triangle up, or triangle down, make arrow up. Below, make above. Make this blue or green or whatever. Triangle up, make an arrow down, make this red, make this below. That's it. Now, you just gave yourself signals. Now check this. If I copy the indicator, I paste it on the chart, I change the setting from 2 to 3, I just gave myself double signals. That right there, plus the super trend, which I'm going to add on twice, tweak the settings, change this to a 1, change this to a 2. Now look. You have your buy signal here, buy signal here, buy signal here, buy signal here. You're in a trade for the upside. Okay? Give me a second. Small little scalp. Now this being a 1 minute, you're looking more for the clear direction. So from our open, right? You see the drop. You see how the super trend stays above the price. Yeah, we get the up arrows, but it has to break the super trend for us to care about it being free and clear. It doesn't, it fails. Get the fractals, drops. They try to break it again, breaks the first one, can't break the second one, drops. Get our buy signal again, weak pump, see the candles, weak pump, can't break it, downside. This is also your signal of why you're trading to the downside too, because it's respecting the super trend. We get our first little crossover here, and then we're starting to create the indecision. Once, twice, 3 times, 4 times, took that trade. We were actually in this and we took this. And now price action has retraced a little bit now. So if I go back to my analysis on my bull market right here, which we had up, and we're gonna wrap up here, guys, so that you guys can see how this is what it is, this is what it does. So that was our C wave. Didn't play out super spectacularly. Didn't go as far as I wanted yet, but that's cool. We were able to get in and out that scalp. Prices are tracing back down to demand. And then all we do is wait for our indicators to give us clear direction once again. Wait for that to go green. Wait for our breakout here. This didn't even break out yet. The black line has to take off. So we're only waiting for whatever line is working with the black line. So right now, no trade setup. Wait for the next one. Blue line is going to cross red. When this takes off, that's our trade. So once again, guys, like I said, I don't want to make it too much in one call, but at least if you could take away one of the two strategies, which is either the first one I showed you with all the stuff on it, or you can use this fractal super trend strategy. This should be able to help you guys be able to trade pretty confidently. So hope that helped you guys, and I'm gonna end it here. So
All right. Thank you so much. As I said earlier on, ATM doesn't disappoint when it comes to delivering value, and we appreciate your efforts on the stream. So I dropped some, I think he dropped some links under the comment section. You can also check out his channel and his videos. Also, I would advise that you go to my channel and watch Mastering Price Action Basics and then High Probability Trading Strategies, which are quite new on the channel. They are really helpful stuff that I think is also good for beginners. Right. So if you want to go deeper, you can also send him a message for one-on-one paid consultations. They are not free; they are paid actually. Yes, just for your info. All right. So I think it's gonna be a good night. Thanks to everyone for watching, and I'll meet you in another stream. ATM, any last words?
take your time, guys. Have patience. Don't rush into this stuff, and make money.
All right. Thank you. Bye.